So next is testing the existence assertion. So I forgot to mention earlier that in the reviewing the shipping log and sales invoices, testing of existence assurance can also be used because um, the sales invoices are tested if it really exists. So that is on my previous discussion. So testing the existence assurance. So one of the most widely performed tests of existence is the confirmation of accounts receivable. Since we are talking about the revenue cycle, the existence of the accounts receivable is very important. That is because that is where the sales or the money that will be receiving by the organization by the sale or by the sale that happened, it is charged to the accounts receivable. Because usually in an organization, when they sell a big product or huge deliveries, when they sell many products or they produce many finished goods, accounts receivable are charged, or where the sales are charged. They are always together, the sales and accounts receivable. And it is important that confirmation of accounts receivable is there. So, in confirming the accounts receivable, it is this test involves direct written contract between the auditors and the client's customers to confirm account balances and transactions. So, statement on auditing standards number 67 or SAS 67, the confirmation process states that the auditor should request confirmation of accounts receivable except in the following three situations. First is when the accounts receivable are immaterial. So, there's no need to confirm accounts receivable if the accounts receivable is immaterial. Because when we say immaterial, the amount of accounts receivable is not that high that that it is immaterial, that it cannot affect the decision making of the organization. Second is based on a review of internal control, the auditor has assessed control risk to be low. So when the internal control or when the assessment of the auditor to an organization is low, then it means that an fraud is existing to the organization since the control risk is low. And third is the confirmation process will be ineffective, meaning there's no use or there's no point of confirmation process because it is ineffective. So this last point is worthy of further explanation because of the way some organizations account for their liabilities. They may be unable to respond to requests for confirmation. So, one of the example is in a government agencies and large industrial organization, they often use an open invoice system for liabilities. So under this approach, under the approach of open system, invoices are recorded individually rather than being summarized or grouped by the creditor. So, in this environment, no accounts payable subsidiary ledger exists. Each invoice is paid or closed as it comes due. So, for financial reporting purposes, total accounts payable is calculated simply by summing the open or unpaid invoices, determining the liability due to a particular creditor, which may consist of multiple open invoices, is not such a simple task. The auditor should not assume that an organization using the approach would invest the the time needed to respond to the confirmation requests. So, under such circumstances, the confirmation process would be ineffective. So, we assume now that the accounts receivable are material and that the auditor had decided to request confirmation from the client's customer. We assume that it is material. So, the confirmation process involves three stages. First is selecting the accounts to confirm, preparing confirmation request, and third is evaluating responses. So, we will be explaining the three steps on the following slides. So, let's have self-check number one. So, evidence from testing the product prices charged to customers supports the audit objective of letter A, existence, letter B, accuracy, letter C, completeness, and letter D, allocation. So the answer to this question is letter B, accuracy. Evidence from testing the product prices charged to customers supports the audit objective of accuracy. As we all know, accuracy is about the correct amount of prices, or it is about the correct amount or correct digit or number, or specifically amount. As for letter A, existence, it is not about the prices. So, existence is the test that involves direct written contract between the auditors and the client's customers to confirm account balances and transaction. It is to confirm. While completeness, from the word itself, completeness, if the shipping log or the shipping log or the sales invoices are complete. While allocation, it is to support the accounts receivable are stated at net realizable value. So, first way in the confirmation process is selecting accounts to confirm. So, given the file structures used in our example, which is selecting accounts receivable for confirmation involves processing data that are contained in both the customer and the sales invoice files. Each customer record is associated with one or more sales invoices records. So recall that from a previous discussion that the accounts receivable balance for a particular customer is calculated by summing the open sales invoices and um, and for the customer. So once cash is received in payment of an invoice, it is closed by placing the payment date and the cash receipt number in the respective fields. Thus, the sales invoice file provides the financial information needed for the confirmation request, and the customer mailing information is contained in the customer file. So, obtaining a set of accounts for confirmation requires three steps. First is to consolidate the invoices by customer. Second is join the data from the two files. And third, select a sample of accounts from the joined file. So, to consolidate the datas that are under selecting the accounts to confirm is first is to see the open balances. In this, on the table shows which is the consolidating the invoices. So as you can see, the item 214088 are already closed. Also, the item 214121 are already closed, and the item 21485 are already closed. So after consolidating the invoices, you need to join the files. So take note that on the table that is already joined, which is the table 9.4, the closed invoices are not on the table 9.4, or the join or the files that is being joined. So after joining the files, you are going to, or the organization will have the customer file structure with sample data. So in the table 9.5, these are the file of the customer, which they have the customer name, the street address, city, state, zip code, and credit limit. So these are the open invoices. And then lastly, in the confirmation process, select a sample of accounts. So in a moderate to large sized organization, the accounts receivable file may contain thousands of records. So rather than confirming all of these accounts, the auditor will probably choose to select a sample of records. So to assist the auditor in this task, ACL's sample feature offers two basic sampling methods. First is the random sampling and the monetary unit sampling. So the choice of method will depend on the auditor's strategy and the composition of the accounts receivable file. If the account balances are fairly evenly distributed, then the auditor may want an unbiased sample and will thus choose the random sample approach. So, under this method, each record, regardless of the size of the accounts receivable balance, has an equal chance of being included in the sample. If, on the other hand, the file is heavily skewed with large customer account balances, the auditor may select MUS, which will produce a sample biased toward the larger amounts. So the ACL's size command helps the auditor calculate sample size and sampling intervals based on the auditor's desired confidence level, the size of the population being sampled, and the assessed materially threshold. So these parameters are entered into ACL to draw a physical sample from the accounts receivable file that is sent to a new output file, which is usually called AR sample or account receivable sample. So the structure of this file is the same as the account receivable file, but it contains far fewer records. So the example is from the several thousand records in the accounts receivable population, perhaps only 150 records are selected for the sample. So that is on selecting accounts to confirm. And the next is preparing confirmation request. This is still under the confirmation process. So the next stage in the confirmation process involves preparing confirmation requests that contain the information captured in the AR sample file, as I have mentioned earlier. So the requests, which usually take the form of letters, are drafted and administered by the auditor but are written in the client entity's name. So the example given in the slide is an example of a positive confirmation. So recipients are asked to respond whether their records agree or disagree with the amount stated. So a positive confirmations are particularly useful when the auditor suspects that a large number of accounts may be in dispute. They are also used when confirming unusual or large balances, or when a large proportion of the total accounts receivable arises from a small number of significant customers. So, when there is a negative confirmation request, the recipients to the respond only if they disagree with the amount shown in the letter. So, this technique is used primarily when accounts receivable consist of a large number of low value balances and the control risk of misstatement is considered to be low. So the sample size for this type of test is typically large and may include the entire population. Evidence from non-returned negative confirmation selected from a large population provides indirect evidence to support the auditor's expectation that the accounts receivable are not materially misstated. So, responses to negative confirmation, particularly if they are widespread in a large population, may indicate a potential problem. Since the negative confirmations approach does not prove that the intended recipients actually received and reviewed the confirmation letters. Evidence of individual misstatements provided by returned responses cannot be projected to the entire population. In other words, responses to negative confirmation cannot be used as a basis for determining the total dollar amount of the misstatement. So, such evidence can be used, however, to reinforce the auditor's prior expectation that the account balance may be materially misstated and that additional testing of details is needed to determine the nature and amount of the misstatement. So, once the auditor decides upon the nature and the wording of the confirmation letter, the auditor can create it using a word processor. So the ACL's export feature can greatly facilitate the physical task of inserting the relevant financial data for each customer into the individual letters. Using this option, the auditor can produce a text version of the AR sample file that can be integrated with the confirmation letter text using the mail merge feature of a word processing package such as MS Word or WordPerfect. So this facility greatly reduces the clerical effort traditionally associated with the confirmation activities. So that is when preparing the confirmation letter. So next confirmation process is evaluating and controlling responses. So maintaining control over the confirmation process is critical to its integrity. Evidence provided through confirmations is less reliable when contact between the auditor and the debtor is disrupted by client intervention. So the auditor should take all reasonable steps to ensure the following procedures are observed. So first, the auditor should retain custody of the confirmation letters until they are mailed. The confirmation letters, together with self-addressed stamped envelopes, should be addressed to the auditor rather than the client organization. The confirmation request should be mailed by the auditor. If client mailroom personnel participate in the process, they should be adequately supervised. So, when responses are returned to the auditor, discrepancies in the amount owed should be investigated. The auditor should evaluate exceptions to determine if they are represent isolated instances or signify a larger potential problem. So, for example, frequent complaints by debtors that the client is slow to record cash payment may indicate misappropriations of cash and the lapping of accounts receivable. So, lapping is discussed in chapter 12. Let us not discuss it here. So, non-responsive responses to positive confirmation also need to be investigated according to SAS 67, which requires that auditors needs to use alternative procedures to resolve this issue. So, a commonly used procedure is to review the following periods closed invoices to determine if the accounts were actually paid. Since it is unlikely that a customer will pay an account that is not owed, Subsequent cash payment provide good evidence of the existence, accuracy, and evaluation objectives. So next is testing the valuation or allocation assertions. The auditor's objective regarding proper valuation and allocation is to corroborate or support that accounts receivable are stated at net realizable value. This objective rests on the reasonableness of the allowance for doubtful accounts, which is derived from aged accounts receivable balances. So, to achieve this objective, the auditor needs to review the accounts receivable aging process to determine that the allowance for doubtful accounts is adequate. Aging accounts receivable as accounts age, the probability that they will ultimately be collected is decreased. Hence, as a general rule, the larger the number of older accounts that are included in the organization's AR file, the larger the allowance for doubtful accounts needs to be reflect to the risk. So, historical trends in collection success also play an important part in estimating the bad debt losses for the period. A key issue for auditors to resolve, therefore, is whether the allowance calculated by the client is consistent with the composition of their organization's AR portfolio and with prior years. Also, the auditor needs to determine that the allowance is consistent with current economic conditions. An example is when an organization enters into a period of economic decline may experience an increased percentage of bad debts relative to prior, more prosperous years. Under such circumstances, a larger portion of past due accounts may need to be included in the allowance calculation than had previously been the case. So, a starting point in an attempt to gain assurance on these issues, the auditor may decide to recalculate the aging schedule. So the table show is uh, describing the ACL's account receivable aging feature. So using the sales invoice file presented in table 9.3, as I have shown on the previous slides, the key data fields used in calculations are invoice amount and due date. So the system compares the due date in the record with a specified cutoff date to produce aged summaries of the invoice amount data. So the default intervals used are 30, 60, 90, and 120 days. Um, this, however, can be changed to any values that better suit the auditor's needs. So keep in mind that the sales invoice file contains all sales invoices for the period. Only the open sales invoices, which are those with blanks in the remittance number field as of the cutoff date, should be considered in the calculation. So by filtering on the remittance number field, ACL will ignore all closed invoices. So upon executing the age command, a report similar to table 9.7, which is shown, will be produced. The aging report provides a clear picture of the account's receivable composition. The total balance of accounts receivable outstanding at the end of audit period is $468,889.69. So, as of the cutoff date, there is $217,113.27 of the outstanding balance is not past due. However, 17 invoices are between 90 and 120 days past due, and 13 invoices are over 120 past due. So, the auditor should review past due balances with the credit manager to obtain information for basing an opinion on their collectibility. The auditor's objective is not to assess the collectability of each account, but to determine that the methods used by the credit manager is to estimate the allowance for doubtful accounts is adequate and that the overall allowance is reasonable. So let's have self-check number 2. The following are the stages of confirmation processes, except letter A, selecting the accounts to confirm, letter B, preparing confirmation requests, letter C, evaluating the responses, letter D, reviewing the internal control. So the answer to this question is letter D, reviewing the internal control. So the letter A, B, and C are the stages of confirmation processes, in which selecting the accounts to confirm, preparing confirmation requests, and evaluating the responses. These are the processes to confirm the accounts receivable.